For many years, Kenyan taxpayers knew only one major income tax deadline, that is 30th June. But in 2026, the Kenya Revenue Authority filing deadlines have changed according to the Finance Act 2026. And if you don't understand your correct KRA filing deadline, you will end up facing unnecessary penalties and interest. I will explain the new KRA tax filing deadlines for 2026, the changes you need to know, and how to plan your filing early. Before we look at the different Kenya Revenue Authority filing deadlines, it is important to understand why these deadlines do matter. Missing a tax deadline can lead to penalties, interest, and compliance issues with KRA. So many taxpayers make this mistake of waiting until the last minute to file their tax returns. Sometimes they start preparing when the deadline is only a few days away, and this can create unnecessary pressure. The best approach is to know your filing deadline early, prepare your records in advance, and then submit your tax returns on time. So one important thing to understand is KRA does not have one single filing deadline for every taxpayer. Different tax obligations have different deadlines depending on the type of the return that you are required to file. For example, annual income tax returns have their own deadlines, while monthly obligations like the payee, VAT, withholding tax, and turnover tax, they have different deadlines. So this means that as a taxpayer or a business owner, you need to understand which tax obligations apply to you and when each one should be filed and paid. So let's start with the annual income tax returns. These are the returns where taxpayers declare the income they have earned during a particular year of income. For example, income earned during the year 2025, that is from January to December 2025, was reported in the income tax already filed by June 30th, 2026, the one that we previously filed. So traditionally, taxpayers have been required to file their annual income tax returns by 30th June following the year of income. So for the year of 2026, the income year of 2026, the traditional deadline would have been 30th June 2027. However, there is an important change that every taxpayer needs to know so that you can not miss out on it. So pay attention to the next slide. Now let's look at the important change that has been introduced in the Finance Act 2026. For individual taxpayers, the deadline for filing your annual income tax returns has changed. Individual taxpayers are people who file their tax returns using their personal KRA PIN number. These include employees, self-employed individuals, or the small business people, students, nil filers, and people with other sources of personal income, provided they are filing using their personal KRA PIN and not a company PIN. Instead of the traditional 30th June deadline, individual taxpayers will now be required to file their annual income tax returns by 30th April. So note that there has been a change from 30th June to 30th April following the year of income. For example, income earned during the year 2026 from January to December 2026 will be filed by 30th April 2027. For companies, the filing deadline remains the same, that is 30th June every year. This applies to businesses that are registered as companies and they file their returns using a company KRA PIN, not businesses that are registered only as a business name. However, there is something important that you need to know. Not all companies have a 30th June filing deadline. So I will explain why some companies have different filing deadlines in my next video. Maybe you filed your returns by 30th June 2026, but you got some penalties of 20,000 but you don't know how it came along. I will explain in my next video what is the difference. Besides the annual income tax returns, there are other tax obligations that taxpayers need to file regularly, and just mention them. We have payee, withholding tax, VAT, and turnover, as I had mentioned earlier. So payee returns are filed by the 9th of the following month. For example, payee for July will be filed and paid by 9th August. VAT returns, withholding tax returns, turnover tax returns, they are filed by the 20th of the following month. For example, all these returns for July, they will be filed and paid by 20th August. These are the monthly obligations, meaning that you should not wait until the end of the year to think about them. They must be filed every month because failure to file them attracts penalties. We also have MRI, or the monthly rental income. It should also be filed by 20th of the following month. They need to be monitored and filed consistently. Now let's look at the common mistakes that taxpayers make when it comes to filing. The first mistake is waiting until the last day to file. This can be risky because you may experience challenges with your records, the system, or the payment arrangements. Another mistake is assuming that all taxpayers have the same deadline. As you have seen, we have different tax obligations, and different taxpayers may have different filing requirements. Some taxpayers also forget to file nil returns when they have no tax payable or they never got any income. Another mistake is confusing the tax filing deadline with the tax payment deadline. Those are two different things. Filing your annual income tax return by the deadline does not mean that you can delay paying any tax due. If, for example, there is a principal tax payable for annual income tax returns and it is not paid by 30th April of that year, interest will apply. Even if the deadline for filing for a company is 30th June, you should have paid by 30th April. So it's always safer to file before 30th April and pay tax if you know that you have tax payable. Because the moment you file after 30th April, the principal tax gets the interest automatically. So how do you plan early? The easiest way to avoid filing problems is to properly prepare early. Maintain your records throughout the year instead of waiting until the filing season. Regularly reconcile your income and expenses so that your information is accurate. Understand your tax obligations and create a tax calendar to remind you of the important deadlines. Then when you prepare early, filing becomes easy and you avoid unnecessary pressure as the deadline approaches. You can also involve a tax consultant to help you plan your tax calendar and also plan or help you in tax filing so that you can be with good books with KRA. So understanding your KRA, or the Kenya Revenue Authority filing deadline, is so important because it helps you remain compliant and avoid unnecessary penalties and interests. So the key message is simple: know your deadline obligations, prepare your records early, and file on time. And note on the key tax filing deadline changes. Every individual tax returns must be filed by 30th April 2027. That is where we begin. So in the next video, we will look at why some companies have different KRA filing deadlines and how accounting periods affect company tax filing that most company owners don't know about. So don't forget to hit subscribe so you don't miss out or get notified on when my next video drops. Thank you for watching and see you in the next video.